Right now, as you watch this, over $2 trillion is being moved, not by you, not with your permission, but it's your money. BlackRock, the world's largest asset manager controlling over $10 trillion, has just executed what insiders are calling the most aggressive capital rotation in modern financial history. And if you have a 401k, a pension, or any retirement savings, you're part of this whether you know it or not. This is the BlackRock $2 trillion play. And by the end of this video, you'll understand exactly why your financial future just changed. Let's start with what's happening right now, February 2026. BlackRock has begun what financial analysts are calling the silent exodus, a massive $2.1 trillion withdrawal from U.S. Treasury bonds. Think about that for a second. Treasury bonds are supposed to be the safest investment on earth. They're backed by the full faith and credit of the United States government. So why is the world's largest money manager running away from them? The answer is terrifying in its simplicity. America's national debt just crossed $38.4 trillion. And here's the kicker. The U.S. government is now paying over $1 trillion per year just in interest payments. That's more than the entire defense budget. Larry Fink, BlackRock's CEO, isn't mincing words anymore. In his latest communications to institutional investors, he's using terms like debt spiral and liquidity crunch. Translation? He thinks the U.S. government's borrowing has become unsustainable, and he's getting out before everyone else realizes it. But here's where it affects you directly. Your balanced portfolio, your target date retirement fund, your pension, they all hold treasury bonds, and BlackRock is systematically shifting these holdings into shorter duration bonds and international assets. Your money is leaving American government debt, and you probably didn't even get a notification. This is the without you part of the equation. Millions of Americans are being rotated out of what they thought were safe long-term investments because one company has decided the risk is too high. So if BlackRock is pulling out of treasuries, where is that $2 trillion going? The answer reveals their entire strategy, pipes and power. This is BlackRock's new infrastructure thesis, and it's built on a single critical observation. The AI revolution is about to hit a wall, not a technological wall, a physical one. ChatGPT, autonomous vehicles, AI medical diagnostics, all of this requires massive computational power, and computation requires electricity, lots of it. BlackRock's latest 2026 outlook identifies energy as the single greatest constraint on global economic growth. Here's the scale we're talking about. Building out the AI infrastructure the world needs will require between $500 billion and $1 trillion by the end of this year alone. Traditional banks can't fund this. They're constrained by debt-to-equity ratios and regulatory requirements. But BlackRock? They're flooding private credit markets to finance these projects directly. They're rotating capital away from pure software plays, companies like Microsoft and Nvidia that everyone's been hyping, and into what they call the picks and shovels of the AI gold rush. Data centers, energy grids, nuclear power plants. Yes, you heard that right. Nuclear. BlackRock is betting big on small modular reactors and next-generation nuclear technology. Because AI needs always-on, carbon-free baseload power, and solar panels aren't going to cut it. This is your retirement money funding the physical backbone of the AI economy. They're not asking if you want to invest in nuclear energy or massive server farms. They're just doing it because they see the bottleneck coming, and they're positioning to own the infrastructure before everyone else catches on. Now we get to the most radical part of BlackRock's strategy. Something that sounds like science fiction, but is happening right now. They're calling it the $26 trillion tokenization endgame. BlackRock has officially declared this the year of asset tokenization. What does that mean? They want to move everything, stocks, bonds, real estate, private equity, onto blockchain technology, specifically Ethereum. Their report states that Ethereum currently hosts over 65% of all tokenized assets globally, and BlackRock is betting that number approaches 100% within 5 years. Why? Control and efficiency. When assets live on a blockchain, BlackRock can bypass traditional clearinghouses. They can trade 24/7. They can move money across borders instantly, and they can reduce the visibility of transactions to regulators and retail investors. This is money moving without you in the most literal sense. Your assets could be traded on a blockchain ledger while you sleep, with none of the traditional oversight in place. They're already doing it. The iShares Bitcoin Trust has already surpassed $70 billion, making it the fastest growing ETF in history. This isn't about Bitcoin as investment. It's Bitcoin as an on-ramp, getting investors comfortable with blockchain-based assets. Think about what this means. Real estate deeds as NFTs, corporate bonds as tokens, your retirement portfolio as smart contracts, all managed through systems most investors don't understand and regulators are still trying to oversee. So let's pull back and look at the full picture. Financial analysts are calling it a barbell strategy, and understanding it is crucial. On one end of the barbell, hard infrastructure assets, energy grids, data centers, nuclear power, real physical assets that generate predictable cash flow. On the other end, digital tokenized assets, cryptocurrency, blockchain-based securities, tokenized real estate. These provide 24/7 liquidity and exposure to the new digital economy. And in the middle? Almost nothing. They're avoiding traditional corporate bonds, long-term treasuries, and standard equity indices, the very investments that have formed the backbone of retirement portfolios for decades. BlackRock is essentially saying the old financial system is dying, and they're positioning your money for the new one, whether you're ready or not. For Western investors, this represents a fundamental shift. You're no longer betting on steady returns from stable government bonds. You're betting on BlackRock's vision, a world powered by AI infrastructure and governed by blockchain technology. The question is, do you agree with that vision? Because your 401k just voted yes. Let's get practical. What does this mean for your actual money, and what can you do about it? First, check your holdings. If you're in any major index fund or target date retirement fund managed by BlackRock, your asset allocation has probably changed dramatically in the last 3 months. You might have less exposure to government bonds than you think. You might have more exposure to private infrastructure debt than you agreed to. And you almost certainly have some exposure to digital assets, even if you never decided to invest in cryptocurrency. Second, understand the risks. Infrastructure investments can be great long-term holdings, but they're illiquid. Tokenized assets operate in a regulatory gray area and could face sudden legal challenges. And the shift away from treasuries means you're taking on more risk than traditional balanced portfolios carried. Third, consider your timeline. If you're in your 20s or 30s, BlackRock's aggressive rotation might align with your risk tolerance. But if you're approaching retirement, this strategy might be taking on more risk than you're comfortable with. The problem is, opting out isn't easy. You could move to different fund managers, but most are following similar strategies. You could go to individual stocks and bonds, but you lose diversification and low fees. Here's the bottom line. BlackRock's $2 trillion play isn't just a market move. It's a bet on the future structure of the entire global economy. They're betting government debt becomes too risky, that AI infrastructure becomes the most valuable asset class, and that traditional finance gets replaced by blockchain-based systems. And they're making that bet with your money. This isn't conspiracy theory. This is publicly available information from BlackRock's own official reports and filings. The question isn't whether this is happening, it's whether you're okay with it. Your money is moving, the pipes are being built, the tokens are being created, all while you go about your daily life, unaware that your financial future is being reshaped. Maybe it's time to pay very close attention, because passive investing might mean passively accepting whatever future they decide to create.